Okay, well. Good morning, folks. So first of all, this is not supposed to make you trade with live fans. It's not meant to be a financial advice. It's only for educational purposes. Okay, it's to educate you on forex trading, futures trading, all the other forms of trading. All right. So let's get straight into the market. So we're going to look at having a basic trading plan to meet your needs. So first of all, I know most of you have a lot of needs. Okay, most of us have a lot of needs that we need to meet. So, but I decided to start with one of the needs, which is food. Okay, there may be a house. It's possible I chose $1,000 for a whole month. Obviously, there's a particular house that has a lot of family, so $1,000 is nothing. Okay, it can help take care of their groceries. I mean, in all types of food that are cooked in the house, all types of things that are eaten. So I did it for the maximum, for the maximum amount of family. Like you have a lot of family, like so. So if you have minimum, of course, it's going the money is going to reduce, of course. So that's it. So when you have a type of need like this to take care of, okay, you may want to sort of split this money into about 4 tranches. So every week, imagine you have a trading plan that gives you about $250. Okay, the following week you trade and you make about $250. So at the end of the month, you have about $1,000 to take care of your one of the needs. Okay, so I'm starting with food so that as you go on, you yourself can put in the other needs and then have a trading plan in order to be able to meet those type of needs. Okay, so one of the first things you need to ask yourself is, how do I go into the market? So the first thing you do is to look at forexfactory.com, which is one of the sites I use to check my economic calendar, to give me a lot of hindsight, a lot of to let me know when and how there's going to be economic events on the market. So whenever there's an economic event, the market tends to pump in a lot of volatility onto the market. Okay. During those periods, there might be a lot of orders that are flying left, right, center. So the central banks, are forced, because of the orders, most of them may be forced to, trade their orders that are there. And what happens is that most of the big institutions, they know that retail traders tend to have some belief that there's a retail concepts, which are the bull flags and some of these harmonics and some of these things that people use. So they know, and they tend to go there, and the big institutions rather use those highs and lows whenever there's volatility to try and engineer new orders. Okay, so as you are thinking that your harmonics is working for you in a certain sense, once the market goes there, you notice that the market quickly reverses and goes to the opposite side of the market. So that's retail level of thinking. So I learned a different concept from a gentleman called Michael Huddleston, okay, popularly known as ICT, and he taught a different level of trading altogether, and he made us understand that the big institutions rather looks at our knowledge of trading, and then they trade on the opposite side of the market. So you notice that after a while, some of these concepts, the bull flags, harmonics, and some of these pattern way of trading tend to fail you, and they don't bring consistency. Okay, some of them are good, but the consistency rate is not much higher, you know. And sometimes it's difficult to have a trading plan, with some of these. One of the main things is it's difficult to sometimes have a trading plan with some of these pattern type of retail type of pattern trading. So that's it. Okay, so this website, Forex Factory, gives you, first of all, an idea, of how the market is going to go like for the rest of the week. So on Saturday, Sunday, you sit down behind your laptop or your phone. You go onto Forex Factory and then you check. Okay, so let's go onto the Forex Factory site. So this was last week's trading. If you look at the date, it's from 2nd of July to the 8th of July. Okay. So one of the first things that you like to do is to go to that blue, just a blue, green toggle filter on the right hand side. Okay. So once you get there, you can see there are 4 types of boxes that are there. The first box represents high impact news, okay, which is what I normally use to be able to know what time the market is going to engineer liquidity. Okay, most of the trading sessions happen. Most of the high impact liquidity happens during the New York sessions. Okay, they happen during the New York sessions. So it's after those volatility that we get to know how these big institutions, they begin to see how are we thinking, how are the retail guys thinking, how are the harmonic people thinking. Then they do the opposite of how we are thinking rather. Okay, so the red one represents high impact. Medium impact is represented by the brown. Yellow is a low impact news, and then the gray probably means there will be not much volatility or there's a holiday, so it's a sleeping day for the market. So we normally focus on the high impact news. Okay, so we use the red and then the gray one. So the gray one gives us a sense of the fact that, look, market, there's nothing going to happen during this week, so let's just sleep. So that's why I have those 2 toggles on. And then the event types, we use all the types of events, and then the currencies, we use the US market, okay, and then the European market as well. Yeah. So what we normally do is that we look at the day and the time. Okay. So it's also very important for you to set your Forex Factory time to US Eastern time. Okay. So this is where this is how you go about that. So you look on the left hand side of the chart, you see the time over there. So you click on it. Okay. Click on it. And it will send you to the time zone. Okay. So when you go, you see Eastern US time -4. That's what you use, okay, to be able to know the exact time that is in the US. Okay, so you save it. So we go to the 3rd of July, Monday 3rd of July. Let's see what happened after 10 a.m. So this is trading view. I normally use trading view because it's good. It gives you, it helps you to identify the time the same way. So when you also go on trading view on the chart, you need to set the time to the same time, -4 New York time. Okay. So folks, so we're using trading view, S&P markets, S&P 500 index markets. Okay. So when you look at so this was the 10 o'clock window, the July 3rd. Okay, this was the 10 o'clock window, and so you can see after that trading hours, the market leaves a high here. Okay, a high here. Okay, so we look back and look if there's any lows, and there was a low here. So market would like to come back inside and take out this low. Okay, market would like to come back and take out this low. Once they take out this low, the next form of where institutions will put their stops will be at the high of that economic calendar event that happened. Okay. So once this low was taken out, these lows, once they were taken out by this, okay, so now what happened was that this first candle, 1020 candle, opened, came all the way down, took out this low here. Okay, so this one is this a fractal indicator? It's an indicator that's just on every trading site. You can get it for free. It's not any costume one, it's just normal one. So once they took it, market went up. This is not the time to trade because there's no breaking market structure. Later on, I'm going to teach on breaking market structure. Number one, you need to see a breaking market structure. Okay, so what is a breaking market structure? Market gave a lower low, went high, broke this low here, the trend swing. Okay, broke it here. This market, this candle closed below this. It means market is still on the low side. Went up, came, broke it again. It means market is still on the low side. Now look at it. Now market rallied up. So you see where this lab emoji is? That's the swing that was broken. It indicates a change in the structure. It means that market is going bullish. Okay. It means this swing, okay, has been broken by this huge candle on the 1105 candle. It's so huge, it breaks it above this swing high. Once it breaks it, look at where this square, I've put in this square. There's something we call fair value gap, okay, which is a gap that's right here. Later on in the video, I'm going to teach you on fair value gaps and all. But you can see how market, after breaking that structure, took trades off here. So this will be your entry. Okay, so you see market came all the way back down, came back down, came back down. Okay, couldn't close below this. Okay, but then you can see the reaction. It means others are being picked up from there. You can also see the market couldn't close below the middle of these candlesticks. It's an advanced form of trading called trading pattern called consequence encroachment. Okay, all these things I was taught, right, by my #1 trainer, Michael Huddleston. Okay, so you can see market couldn't close below it. Okay, how did I get the midpoint? You use the fib to divide the that gap into two. the middle of it is the consequent encroachment. So you can see that market couldn't close below it. Okay, you can see it. The market couldn't close below it. So that's how it is. So you need to watch all those things whilst you trade it. Okay. So then our exit was at the top, which was 50 pips or 50 handles. Stop loss was below here, just about 20 pips or so. So you can see the risk to reward ratio quite high. Okay. So you can see it right there. Okay. So that's it. So once you are done following these routines, okay, that's it. You are done for the week. Close the market, or you can even uninstall your MT5, MT4, whichever one you use. Don't go into the market again. It's one of the rules I struggle to keep with, but trust me, sometimes one of the things I do is I just go out. Okay, I just spend the rest of the time going out, doing what I love doing personally. You know, I'm a Christian. I like to go out to evangelize, talk to people about their salvation, why they need to, you know, protect their soul, and, you know, be in Christ, who is someone that is an example they can follow. Okay, that's what I love doing. So that's what I basically do. Sometimes I just give my phone to a loved one I know. Hey, my friend, please hold my phone for me. I'm not coming for it for the next few day or two, you know. So of course, because I use various numbers, so that's why. So, and sometimes I have different gadgets that sometimes I also use. So just to get rid of it and not to be tempted to trade again. So we keep doing this every single week. So every single week there's definitely a high impact news happening, and we use that as a form of, you know, trading. So folks, that's it on the basic trading plan to meet your various needs. What you need is to go back into your chart and to see if you see these examples. Follow the video pattern and see if you can see these examples on the particular days that there was high impact economic event news. And after the impact, you notice when exactly the highs were taken, market structure was broken, and then, you know, you follow it through. Okay, so with much said, so tomorrow is Wednesday. I'm going to upload a video on this channel. You know, just to, immediately after the economic event, okay, I'm gonna give some trade ideas, call out some trade ideas of what markets may do. And like I say, it's just for educational purposes, okay, so that you yourself go into your chart at the right time that you think that you'd want to start your trading career. You can decide on what to do based on the examples and educational things you've learned from here. Okay, so that's it. See you tomorrow. So click the link that is down there to register on the broker that you can get the currency that I'm gonna be trading on, and then subscribe so that once I also send the video, you can have an alert once I send the latest video on time. Okay, on time. So that's it. as you were.